Hi friends, welcome back to my channel. In today's class, we are going to solve Specimen A-Level Accounting Specimen Paper 2023, Paper 3, question number 3. So this is the insert source documents or insert for question 3 and this is the question paper. So you have to do the problem solution by taking the source from the insert. So let's start. Question number 1. Here first we can check what type of question is this. Amil and James are in partnership. Their statement of financial position 1st January 2020 given. This is the balance sheet or statement of financial position. All the assets, liabilities given of the partnership. Next, M Limited took over the business of the partnership of Amil and James on 1st January 2020. The question has given the balance sheet or statement of financial position of a partnership by Amil and James. And next they are talking about M Limited, a company purchasing this partnership at 1st January 2020. The following information is also available. When they are purchasing, the information given, partners did not keep current account. Amil and James shared profit and losses. The ratio 2:3. These were their ratio. And assets of Amil and James are to be valued. The M Limited, they are taken their asset at this price. The valued price are, these are the price. These are the price taken. When they are taken the assets and liabilities, these are the price they valued. Next, Amil, he has taken one computer 2500. This has not given to the M Limited. The partner Amil has taken. Next, M Limited will take over all the remaining assets and liabilities except James loan and cash and bank. They are taking all the assets and liabilities except cash and bank of the James Limited and the partnership loan of the James. Next, the terms of sale, how they are giving the purchase consideration. What is purchase consideration? Purchase consideration means the price paying to the partners when the company is purchasing price or the selling price. So here M Limited will give the money as 6% debenture, then 50,000 ordinary shares. The price is 1 and premium 0.20. So 1.20 is the total price. The balance amount they will give us 20,000 they give to the partnership bank account. The money will be transferred to the bank account. So this is the question. This is the complete details they are given. Hope you are clear with the details. So next move to the question part. The first question. Explain the difference between inherent goodwill and purchased goodwill. Inherent goodwill is the goodwill the business get with their own efforts and hard work. So they will not show this in the financial statement, while purchased goodwill is the goodwill they are getting when the business is purchasing another business. So that business reputation become the reputation of the purchasing business. So that is called purchased goodwill. It will be showed in the financial statement as intangible non-current asset. So we can write inherent goodwill is gained by the efforts of business. It is not included in the financial statements. While next, which goodwill? The purchased goodwill. The purchased goodwill is the purchased goodwill is the excess of purchase consideration this is the money they paid more than the net asset. Purchase consideration over the net asset. If the business paid more than their net asset amount, so that is because of that company's reputation. So that amount is called purchase goodwill. It shows in the financial statement because the company already paid the amount for this financial statements. Hope you are clear. So, inherent goodwill, they get their own hard work. The other one is purchased one. So, the purchased one goodwill, they will show in the book. Next, calculate the amount of debenture to be issued to James. James has had already one loan in the partnership business. So, when they are converting the partnership, when they are selling the partnership, the loan become the debenture in the company. In a company, long-term loan is called the debenture. So, it will become the debenture. So, first let's check what is the amount of loan. The loan amount in non-current liability, they are given 4% was the interest. Loan amount is 9,000. Then what was the debenture interest? Loan is 9,000, 4% was the interest. But what they agreed, the business M Limited's loan 6% debenture. Here M Limited is issuing 6% debenture to loan from James. They will give the 6% debenture. So, we have to convert the 4% loan to 6% debenture. So, how many debenture? 9,000 was the $9,000 was the loan amount. The percentage of interest was 4%. That is 360. So, they have to get, James has to get the same amount as debenture interest also. So, how many debenture the company should issue to him? So, the company debenture interest is 6%. So, when the company pays 6% debenture interest, it must be 360. So, how many debentures how to find? 360 multiply 100 divided by 6 is equal to 6,000 debenture they have to issue. Next, C part. Prepare the journal entry in M Limited's book to record the purchase of partnership. So, M Limited has purchased the partnership. So, how to enter the journal entry? The journal entry will be all the assets at taken value. At what value M Limited has taken? Assets at taken value will be debited and liabilities and purchase consideration will be credited. It will be credit. And any difference, if the purchase consideration and liability is more, the difference will be called goodwill. It will be, that difference will be written on the goodwill account. So let's see the assets taken value. So first we can do the journal entries. Debit, so first we take all the asset at taken value. So the assets at taken value, let's see the assets. We have assets, long-term asset and current asset. Long-term asset, building, office equipment 40,000 and 16,000. So building and land and building and office equipment. So land and building and office equipment, the taken value is land and building 50,000, office equipment 14,000. The same time they are saying Amil will take computer valued 2,500. So the office equipment M Limited is taking the value land and building 50,000, office equipment 14,000 minus 2,500. That is 11,500. So first we can write land and building and office equipment. Land and building, office equipment. Land and building is 50,000. Before the value was 40,000, but they are taken at 50,000. Office equipment 14,000 minus 2,500. It become 11,500. So non-current asset we are taken. Next we have the current asset. Current assets are inventory, trade receivables. Bank will not take here. Inventory 10,000, trade receivable 19,000. What is the taken value? Taken value must be given here. Inventory 8,000, trade receivable 16,000. We do the journal entry at what value M has taken. So inventory and trade receivables, inventory, trade receivables except bank. So bank will not take. Inventory is 8,000 is the taken value and trade receivable they have taken at $16,000. So all the assets and assets we are taken. Next we have liabilities. Liabilities. Here they are not given the taken value, different value. Liability is given. Liability, they said all the assets and liabilities except loan and cash. So loan will not take. So we have the current liability 14,000. So current liabilities 14,000. Current liabilities 14,000. Then purchase consideration. Already I have given you how to find. Assets we are taken all the assets. Now liabilities we are taken. Next we need purchase consideration. purchase consideration. How they were giving the purchase consideration? 6% debenture, 50,000 shares at 1.20. 1 is the price, 0.20 is the premium, and balance at 2,000. So they are giving debenture and they are giving debenture, share capital, share premium, bank. So we write debenture, share capital, share premium, then bank. So bank, they are said bank is 20,000. So directly we can write bank. Then debenture. Debenture already we calculated here. See, this is the debenture. Debenture is 6,000. So debenture amount is 6,000. Then share capital. Share capital means how much the share capital? 50,000 multiply 1 is the share capital. Then premium is 50,000 multiply 0.20. Share capital is 50,000 multiply 1. Share premium 50,000 multiply 0.20. How much it comes? 50,001. That is 50,000 and premium is 10,000. Now we have written all the assets and liabilities. Now we have to find the difference. If the difference is coming on the debit side, that called goodwill, otherwise it called the capital reserve. So let's see what is the amount in the debit side. Debit side we have 50,000, 11,500, 80,000, 16,000. It comes how much? Add these three, 50 plus 11,500 plus 8,000 plus 16,000. The amount is 85,500 is the amount. Then credit side. Credit side we have 14,000, 6,000, 50,000 plus 10,000 plus 20,000. The total is 100,000. So, debit and credit is not equal. What is the difference? They have paid current liabilities plus purchase consideration. They paid 100,000. But the net asset value is only 85,500. It means they have paid more. What is the more amount they paid? They have paid 14,500. This is the goodwill because the company is a demanded company. They have more reputation and goodwill. That's why the company paid more than their net asset value. So the difference is in the debit side. Credit side we have 100,000. Debit side we have 85,500. So debit side the difference we write goodwill account. This is the purchased goodwill. It will show in the balance sheet also. Goodwill account how much? 14,500. Hope you are clear with this. Next we can move to the next part. Prepare partners capital account to show the closure of partnership. Partnership business, they will prepare their capital account to close their partnership business, and the balance they have to get as back. First they will take all the increasing item in their capital balance, they will check, and the balance amount they have to get as bank. Partners, they want to get their money back. So after adjusted the purchase consideration, the balance amount will be writing as bank. So let's start. First, how we start the capital account? Always we start with our balance brought down. So first you write the date 2020 January first balance brought down. Balance brought down, it must be given in the balance sheet. Balance sheet, they are given capital account, Amil, James, 43,000, 25,000. So first we write the balance brought down. Balance amount is 43,000, 25,000. Next, then there is a loan of James also. James is having one loan is there. That also we take. James loan. Any partner loan, it will be entered in the capital account. James loan is 9,000. It goes to James amount column. Loan. It is James loan. So we write in James amount column 9,000. Next, we have here the asset value. Asset value was revalued in the time of purchase, in the time of purchasing. So we have profit on realization we will have. So you write profit on realization. Profit on realization. How to find the profit on realization? So please write the equation to find the profit on realization. Profit on realization is equal to purchase consideration minus net asset shown in balance sheet. Not in the taken value, but the net asset shown in the balance sheet. Net asset shown in balance sheet, not the taken value. Okay. So in the when we enter the journal entry, we enter assets in the taken value. But here, what is the value shown in the balance sheet? So let's check. First, purchase consideration. Purchase consideration already we are written here. What was the purchase consideration? Debenture, share capital, share premium, bank. So 6,000, 50,000, 10,000 and 20,000. This is the purchase consideration. So we have share capital, debenture, that is 86,000 is the amount. 6,000, 50, 10,000, 20,000. Total is we have 86,000. That is purchase consideration we have 86,000 minus the net asset shown in the balance sheet. Net asset shown in the balance sheet, we can go to the balance sheet. Balance sheet, long term asset 56,000. So 56,000 plus next current asset minus current liability. Current asset except cash. So which are the current asset we take here? 10,000, 19 current asset, 10,000 is there, 19,000 is there, then 10,000, 19,000, plus 19,000. Then we have to deduct current liability and 10,000, 19,000. But one asset was taken one by one partner. It was 2,500. That also we have to remove because it has taken by one partner. 2,500 we have to deduct, and current liability 14,000 also we deduct. So 2500 minus 2500 minus 14,000 is equal to 86,000 minus, what is the total of this? 68,500. So the amount is, the total amount is 17,500 is the realization. So this amount of the realization we have to share in their, they will share the realization profit in their partnership sharing ratio. What is the partnership sharing ratio? It must be given in the question. The partners were, they were sharing their profit and losses in 2:3. So this amount will be shared between the partners in 2:3 ratio. Then 2/5 and 3/5. Share the 17,500 between the partners. So 2/5 into 17,500 is equal to 7,000 and 3/5 into 17,500 is equal to 10,500. So now the partners, all the items we are done. Next, what they are getting, they have to get the money back. But when they are sold their partnership, M Limited is giving them ordinary shares. So 2020 January, M Limited giving them ordinary shares. M Limited ordinary shares. Ordinary shares, how much they were giving the ordinary shares? The share was given here. Share capital 50,000 and premium 10,000. So the amount was, total the amount was how much they were giving? 50,000 share capital plus 10,000 premium. Total 60,000 was given to the partners. So this 60,000 also they will share in their ratio 2/5, then 3/5. So 60,000 multiply 2/5 and 3/5. 60,000 multiply 2/5, 24,000, and 60,000 multiply 3/5, 36,000. Done. Next, here one partner Amil was taken the office equipment. That must be deducted from his capital account. So that also we have to write office equipment, computer. Office equipment or computer. Who was taking? Amil was taking. The price was 2,500. Amil was taking the office equipment. Is clearly written here, right? This one. Amil was taken 2,500. It will be deducting from his capital account. So we put it on the debit side, office equipment. Next, James got debenture also from M Limited. So we write M Limited debenture, 6% debenture. Debenture was given to only James. We already calculated the debenture, right? It was 6,000. Debenture already we have calculated here. Right. Here we are already calculated the debenture amount. So they got ordinary share capital and debenture. The balance amount they get from where? The balance amount they will get from their business bank account, because the M Limited has already transferred 20,000 to the bank account, and they have their bank account balance from the balance sheet also. That we can do after this question. So we can balance it. The balancing. Balancing. The total is here. What is the total of James? James total is 44,000. 500. Amils 50,000. We write 50,000, 44,500. So, their balance amount is 44,500 minus 36 plus 6,000, 42,000. That is 2,500 is his balance. And Amils 26,500 is in the debit side. 50,000 minus 26,500. It comes 23,500. This is the balance amount they have to get from the bank. So we write here bank. Any doubt, put in the comment box. Hope you are clear. So the capital account has done. Next we move to the question number 3E. Prepare the partnership bank account recording the closure of partnership. Now we have already solved the partnership. So partners, they have closed their capital account. Next they have to close their bank account also. The balance amount they have to share between the partners. It will be the balance of the capital accounts of the partners. So first we can start the bank account with, we write the bank account. Bank account, we start with the balance brought down. So 2020 January 1st, balance brought down in the bank. Where we get the amount? We'll get the balance of the bank from the balance sheet of the partnership. We are going to close the partnership balance sheet. So cash at bank 6,000. This is the balance of partnership bank balance. So balance is 6,000. Next, the M Limited has given them their purchase consideration balance in bank. We can see here M Limited given debenture, share capital, share premium. The balance amount was given in bank 20,000. So that they have received from M Limited 20,000. So M Limited $20,000. This is their total balance is 6 plus 20, 26,000. Now in the capital account of James and Amel has to get 23,500 and James has to get 2,500. Total balance they have 26,000. So this amount will be given to 2020 January 1st, the purchase time of the partnership. So we write capital. Both partners, they have to get their capital. First Amil, then James. Amil's amount was 23,500. Then James 2,500. So 23,500, 2,500. Now the account has closed. The bank account also closed. 26,000. Then 26,000. Done. So now we are closed the capital account, we closed, bank account we have closed, M Limited they have done their purchasing like a journal entry. Next, the last part of question number 3. F. Discuss the advantages and disadvantages of the decision of the directors of M Limited to purchase a partnership. M Limited, they have purchased the partnership. What is the advantages and disadvantages? The advantages, what will be the advantages, children? The advantages will be the partnership, their customers, M Limited will get their customers, it will increase their sales, it will increase the profit. Then the big business become large business, it, the size of the business increase. When the size of the business increase, economies of scale will be increased. While they have disadvantages also, the disadvantages will be like they cannot predict always it will be profit, and they will not, that is not 100% sure customers will come to the M Limited. Maybe they will find another business and they will find, go to that business. So let's write the first one. M Limited will gain all the customers of the partnership, thus they can increase the profit, they can increase the revenue, sales revenue and profit. Sales revenue and profit. They will gain economies of scale. M Limited will gain economies of scale. Economies of scale. It means their total cost will decrease. When the business increase their size, total cost will decrease. Next, what will be the disadvantages? The disadvantages, the customers of the partnership may not go to new business. Old customers of partnership may go to another business, not to the new business, another business. Then it is the reason there is a dilution of ownership because new shares have been issued. Then next, the directors may take in to develop the business after adding the new partnership. They cannot sure, M Limited can't sure that they will earn more profit after purchasing partnership. Why? Because they can't say all the customers will come to them. Partnership, okay. So when they are purchasing, okay, their revenue will increase maybe, but they cannot predict all the customers will come to them and buy all the products from them, right? So if the customers like the new business, if they are, their other products also they want to buy, then only they will come. Otherwise, they will buy the item from their near location. Okay, hope you all are clear with today's solution. If you are not subscribed my channel yet, please subscribe and support. Thank you.